Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Market-wise, let's take a look at it out here. We have the Dow Industrials up 84, Nasdaq's down 5.5, S&Ps are up 11, gold contract down $22.40, trading at $1,145 an ounce. Silver up 52 cents at $15.42 an ounce. Platinum down 13 bucks at $1,210 an ounce. Copper flat at $3 a pound. Light sweet crude up $1.64, trading out at $78.83 a barrel. Bonds, we have the 10-year flat at 126.08, 30-year down to 6 ticks at 141.02. King dollar up 453 ticks, trading out at 87.55. The euro is at 124.83, and the yen is trading at 114.70. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world? In the world of the S&Ps, let's take a look at them. What do you have? We got to a high out here today of 2014. We're at 2023. Yeah, we got to a high of 2023. We're at 2020 right now, and then that is over the September 19th high. The high that was generated out here on November 3rd was the 2024, which we got right underneath today. So we'll see where this baby does shake out. If we go over to the SPY, we take a look at the SPY. What you have with the SPY is this. The SPY got to a higher high today, 202.59. We're at 202.23, and the last high that was out there, the closing was 201.77. We're over that right now. The actual high was 202.45. Volume is 71 million shares out here. The high out on the 19th of September was 121 million. The high that was generated 2 days ago was 93 million. So bottom line, you have no buyers up here. And this market, you know, you get over the highs. Bottom line, you got to get away from these highs. So we'll see whether the market can get away from these highs. We're at basically the same place that we're trading August 26th. Dow, that's in the S&P. Dow Industrials, we take a look at the Dow. Dow is over the high and has got away from that range. The range in the Dow, realistically, is down about 17,151, and you're at 471 right now. Inside the Dow Industrials, which is putting the juice inside the Dow Industrials, is Visa. Visa's up an additional $5.93. You get DuPont up $1.19. United Technologies up $1.47, and J.P. Morgan is up 79 cents. Taken away from it is Intel is down 59 cents. You have Boeing down 53. Pfizer's positive right now. So IBM is down 85. NASDAQ Composite. We go over to the composite. We take a look at the composite. Excuse me, folks. Composite right now is down $5.50. That's a lot, and it's not a lot. We're at 4617. 46110, folks, would bring you in the lower range. Right now, though, it's in the higher range. Volume on that composite still is going to be weak at these highs. NASDAQ, the NDX 100, that got to a higher high today, 20 million shares. We're at 101.27. And in order to get to the lower range, you would have to get back inside 100.33. Inside the NDX 100, which is putting the juice into it out here today, is that you have Liberty Media is up $2. That's almost 9%. You get the Cognizant Technology up $3.90. Mondelez is up $2, and you got NXP Semi is up $3.47. Taken away from it, you have TripAdvisor. That's down $12. Wynn Casinos is off $7. You get Gilead off $3.72, and Tesla is down $7.51. We go over to the gold market. What do we have with gold? They whacked gold big time this morning. Gold traded down to $11.37. Right now, you're at $11.45. If we you had 239,000 contracts traded. If we bring this up in the continual contract, what you're going to see is that when we bring this back, what is game here So once you get into the 12.20, well, once you get into 11.95 area, well, you know what that opens up. That opens up a huge danger patch. There's no two ways about it. Meaning down to 1045. It's holding pretty good out here today. Meaning as to you goose it down, gets the lower price, has fast price destruction, and it looks like they basically it rejected that lower price as it is. And what that means is that most of the stops that were underneath this got basically taken out because we've only come $12 off the lows, and that's not a lot. There's no doubt about that. If we go over to the dollar index, it's all about the dollar. What you have with the dollar out here is this. Dollar goes up 473 ticks. We were up over 500 ticks this morning. 34,000 contracts. Is it extended? Yes, it's extended, no doubt about that. And it doesn't have any juice in it. So the way that dollar is set up and gold is set up is that I suspect you're going to see reversals out there. The euro, we go to the euro, and if that's the case, of course, what you're going to see is that you're going to see a reversal in the euro. Also, you see a counter trend bounce. The euro right now is at 124.79. The swing point that it broke is 125.04. It did that this past Friday. You know, the low of Monday was 12444. And thus far, you've had a couple thrusts upside, no big deal. Bonds. The bond market, folks, is still saying, guess what? The money's going into bonds. It's rejecting lower price. It's doing it with lighter volume. This bond market still wants to go higher. You know, the high volume high on the 10-year at 130.17. We did 831,000 contracts today on the 10, which is about as weak as you can get. 30-year bond, USZ FOA, what we have with the 30-year out here is the 30-year flat market out here today on the 30-year. We've done 226,000 contracts, and, you know, that bottom line wants to go up and test the 148. Now, who knows what's going to have that baby get up and hit it, but that's where that little baby does want to go. Some of the high-volume stocks in this low-volume market, this is what we have out here. You have Bank of America up 12 cents, Facebook's down $1, FireEye's down $5. That baby's getting hit. That's really got hit off the highs, too. Pretty amazing. If we bring this up for a second, let me just see what the volume looks like. So you're at $29 on FireEye. Yeah, big volume on the way down. 22 million shares. Bottom line is that wants to get down into this $25 area. If we go over to the XAU and the HUI, XAU right now is down at $2.13, trading out at 62.24. And if we do bring this back, what you're going to see is that the low of 2008 is 63.52. And we're below it on the XAU. We go to the HUI. We take a look at the HUI. Put this back to the 2008 lows also, and get some volume characteristics up there. On the HUI, the low of the HUI is 150.27. We are at 149.94. That's going to be a number you want to watch, folks. The reason being is that bottom line is that you'll either get a rejection of that lower price or it's going to bust it. It doesn't have the volume. It didn't have the, well, the HUI didn't have the volume last month. The XAU did. Let's go to Larry in Dallas. Hey, Larry, what's going on?
Oh, doing great, Tom. How you doing?
Doing great, man. Thanks for calling. Thanks for holding.
All right. Would you take a look at Chewy, CHUY? It got slammed today.
Let's take a look. So it's a full-service Mexican restaurant. The low is today $20.65. The high is $43.40. Okay, so what are you looking to do here?
Well, I'm looking for an entry point. It's a good Mexican restaurant. Every time you go there, they're packed. Great food.
Okay, so
can't understand.
I'd wait to the very low. It looks like this thing went public sometime in 2011. 2012, rather. It's going to go after that low. It's going to go after $13, man. So don't touch it right now.
No, I'm not.
Yeah. And, you know, when it gets down there, what you're looking for is this. You're looking for a rejection of lower price first. Then you're looking for a sign of strength, and then you buy the next pullback. Make sure it has a sign of strength before you buy that baby.
Thanks, Tom.
Okay, Larry, have a great one. Have a safe one. Dow Industrials right now up 89. Nasdaq's down 6. S&Ps are up 10.5. You stay right there, folks. Come right back.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Folks, Dow Industrials right now are up 80, Nasdaq's down 10, S&Ps are up by 9.5, and as we do each and every Wednesday at 20 past the first hour, we have our man, Mr. Daryl Martin. Don't forget, folks, every trading day, 1 to 2 Eastern Standard Time, Daryl has an outstanding show right here at TFNN. He specializes in the Nadex platform, and if you haven't traded off that platform yet, folks, it's a dynamic platform. You hear the ads many times that your trade is your stop. The way you can test drive that platform is come over to our website at TFNN. You go to the top or the side, you'll see the Nadex banner. Hit the banner. You can bring up the account. They'll put $25,000 of paper money into it. Once you get that up and going, Daryl has an outstanding analyzer. And scanner, and you can test drive that also. And the Nadex themselves has added so many more contracts, okay? The scanner itself was always dynamic, but the bottom line is that it works in a tremendous way when you're looking for contracts. Bottom line, it's awesome. Each and every trading day, right 1 to 2 Eastern Standard Time, you can get Daryl's program. Daryl Martin, what's going on?
How's it going, man?
It's going great. Well, you know, I can tell you the aspect of the scanner, just looking for contracts is a trip in itself, because this is pretty sad, folks, but I did get lost on the site this morning. You know what I was doing? I was not your site, Daryl, okay?
I was like, what? Come on now.
No. I was looking for the what has happened, folks, is this, and this is nice in a volatile market. What Nadex has done is that they've added 20-minute indices on them. And bottom line is, this morning I couldn't find them. So I mean, it was just, that's a fact. So
they hide them at the bottom, and you can't see them until 9:40, and you have to hit the refresh button.
Thank you. I got it. Okay.
Or if you're on the scanner, they'll just automatically.
No, I know they pop in the scanner. I finally got it. But that was earlier than that, and I was home. I'm saying to myself, hold it. I knew, 9:40. I got it. Okay, cool. Okay. Yeah.
Yeah. So like basically, their first expiration is 10 o'clock. The last expiration is 4.
Okay,
and
good.
They start 20 minutes before that.
Right. And what happens, folks, okay, yes, it's like a bed bug. There's no doubt about that, man. But what you do have, particularly what I like to do, is that I like to put trades on at swing points. And so what ends up happening in the futures market, the bottom line is that, at those swing points, that's crucial. Is he going to make it or break it? So they're kind of intriguing in that aspect, no doubt.
Well, I mean, it's great. You can go in here right now and you can find these 20-minute binaries. Like right here, I got up shown on the screen for those looking in, listening at home.
Yeah, let me pull that up. Okay, cool. I got it. Okay.
Yeah. It shows like 340 right there. Expires in 15 minutes and 51 seconds. Every 20 minutes, that's going to update with the new contracts.
Right.
When the 4 o'clock shows up, instead of having to go between the 4 o'clock,
yes,
and the intraday 2-hour ones and the 4 o'clock 20-minute ones,
right.
They're both going to show up under 4 o'clock, and it'll just sort them by highest to lowest strike. So it makes it really easy, because you don't care if they both expire in 20 minutes. You just want to see all the strikes that expire in 20 minutes.
And folks, this is crucial what he's saying, okay? Because what does happen is this, is that they have different prices. That's the bottom line, And what also happens with the scanner is that you can get the same price of a contract, but guess what? You might have 3 more hours in the contract, or you might only be paying a dime for 3 more hours, which is huge. Yeah.
Well, and we've seen, I've shown live examples on here where we had contracts literally, a tick away, or a few ticks away, but we're actually cheaper.
Yeah, I know.
And like in the wrong direction, you would think it actually should be more expensive to where it was. So we actually found better contracts at better pricing. And sometimes that one tick, like on a binary, can be the entire difference in you winning or losing on a trade. And so, knowing that you have the best contract, and I mean, all it takes is like you basically one trade to pay for the thing. The best contract without having to do any math, in one glance, live updates. It basically takes something that is really a better way to trade, but makes it easier to trade it.
Exactly. That, yeah, right. Big time. That you have something to compare to, because what happens, folks, is that as you're going back and forth, depending if you've been trading futures or options, it's definitely a lot easier understanding and looking at that very quickly where you want to go. But it's the time frames that are absolutely crucial, because the longer time you have, you're going to be paying money for that time, but the key is that how much money you're going to be paying for that time. That's what you want to know, versus what your price projection is, what you're looking for in that time frame.
Exactly. And so if I'm inside the Nadex platform, I'm trying to find, like I said, in that time frame, the next 20 minutes,
yes,
I'm going to think, one, I have to make sure I refresh this every 20 minutes.
Right.
If I'm in the platform, I have to do that.
Right.
And then I go over here to 20-minute binaries, and let's say here in a moment, we're looking at, say, the small caps at 4 o'clock.
Okay, good.
Well, then I got to also, if I want to look at all the ones on the small caps that expire at 4 o'clock,
yep,
I also got to click here. So
right,
I'm literally playing a back and forth game.
Yes.
Trying to figure it all out. Or I can look in one spot And when the 4 o'clocks come up here at 3:40, the 4 o'clocks will start displaying.
Right.
They'll automatically be in the 4 o'clock expiration, all arranged, for you. So you can look in one spot. And that's just if you're looking at just one indice. What if you're looking at all 4 indices?
Yes.
Now you got one screen versus 8 clicks,
That's huge.
And 8 different screens to look at. So just, I made the thing to make it easier for myself.
Right. Yeah.
That was the primary motivation I had just as a trader. I'm like, there are too many contracts. I need to be able to narrow this down quickly. And
well, you did an outstanding job, man. Seriously.
And the traders have helped. I've had hundreds of traders give me, feedback on, hey, can you add this feature, add that feature? And,
right.
I'm always looking to add more and additional features on it, and we're always adding in little things here and there and make it better. But, it makes it 100 times easier. A lot of times people see this and they're like, okay, well, I'll try that after I get it down. And I'm like, no, you don't understand. This is what you want to start with, not what you want to get to.
Yeah, exactly.
It's like you don't want to start with the really hard one. You want to start with the really easy one.
Right.
And I can go to the platform if I need to, but I almost feel that, it's like I go over there and I'm like, oh, this is so clunky, and I hop right back over to the scanner. But, this is where you want to start because it'll make it easier for you right out of the gate to be able to pick those trades.
Yeah. And, what's really cool is that you really see the differences, and they're pretty glaring. You know what I mean? So once you get used to that, it's like, okay, hold it. I can see, you can't see what the exact pricing is just on that, but you can start understanding the pricing structure a lot better. Do you know what I'm saying?
Exactly. You see how the price changes as it moves up and down. We have the simulator. You can go in and go, hey, what if, the Russell moved up 2 points in the next, 20 minutes? What would the price look like? The next few minutes. What would the price look like? It'll automatically give you the P&L on that, the price that you could close out at. It'll update it live dynamically as time passes.
Right.
It'll let you watch a lot of different markets at one time. It'll organize all the data. It does the math because it can be really, it's sort of easy when you're buying. Okay, if I buy for $10, my risk is $10, I can make $90.
Yes.
But when you're selling, it's so easy, especially when you're newer, to get it all mixed up and go, okay, well, if I sell for $10, my risk is $90,
right,
and I can make 10. And it's stuff like that so easy to get confused and messed up, and especially if you're flying through these things. And this will keep all that math, that profit, that loss right there, all done for you dynamically live.
And, don't forget, folks, okay, all the programming, of course, you can get right on your cell phone at TFNN.mobi. What also happens is that when Daryl's on, okay, he trades these news items a huge amount, okay, because he can be bullish, bearish, all of the above. What he walks you through on his show is when all this news is coming out. It's huge. It's dynamite information, folks, okay? So check it out each and every trading day, 1 to 2 Eastern Standard Time. Daryl, you have a great night, safe night, and, of course, we look forward to the show tomorrow.
See you then.
Thanks so much, man. Have a great one. Have a safe one. Dow right now is up 83. Nasdaq's off 11. S&Ps are up 10.5. You stay right there, folks. Coming right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow Industrials are up 86. You get NASDAQ down 8. You get the S&Ps up 10.5 right now as we come into the lows, into the closing bell out here. So if we go take a look at the S&P first, the E-mini, what you have with the E-mini is that we're at 2016. And this has been trying to bust through the level here of this 2017 all morning long. Your first sell out here, the market's opened at the high. And the first sell, someone just continues to say, okay, I don't want it to stay at these highs. You had 87,000 contracts at the first get-go, and it hasn't been able to get over that level then. That's when the E-mini went from 2020 down to 215. You've come up 3 separate times up to those highs, and each time, it never made it to the high, but it's made it to the ICE, and that ICE figure is out there at the 2018. So it's going to be intriguing to see how we come into this closeout here. If we take a look at the NASDAQ futures, the NQs, NQZ, for what we have with the NASDAQ futures is this. NASDAQ futures opened also at their high. They got hit the first time. They haven't been able to get back up to ice. The NASDAQ futures, when they did open, they opened at the 41.76 level. And that first rundown, same deal, monster volume was 18,000 contracts. Now that has only been able to basically make it back to 41.60. You're at 41.43 right now. And what you do have that is hanging out here, you have a swing low out here from 11 o'clock yesterday morning that has some juice underneath it. And of course, when we went topside on the 31st, the bottom of that topside move is 4099. So we'll see just exactly how they can hold these levels out here. Now, let's go over to the XLE. So the XLE, that was one of the weakest indices out here. XLE today is up with 23 million shares, and what you're going to need with the XLE is that it needs a lot more shares than that to bust over the high. Last time we're up at 88 price point, you had 26 million shares. So we'll see whether it can even get to that level. NFLX. Let's take a look at NFLX. What the question is that we're at 377. Do I expect it to get back to 340 or 320? Netflix is a ABC structure on the way down. You already have one gap away. You know, Netflix gapped away at 450, gets down to 331 with volume. Now, the way that this would work, to answer your question, would be your first level. So we're at 377 right now. The first level where it would have some support is 366.17. And what 366.17 is, that is the high of the spike. That's on the daily. You put this on the weekly. What you have on the weekly is that, yeah, the weekly is kind of screaming that 317 wants to get hit. And where the 317 comes, by the way, folks, when we broke down, it broke down from 452 to 331, fast, furious, all of the above, has the juice down there, and we'll see whether it gets more juice. What held it up the first time on the way down was the trading day from the 25th of October. We had 51 million shares that were traded that day. The low of that was 317. The high was 389. And as a few of our folks in the Tigers Den were saying, you had Mark Cuban came out, and when Mark Cuban came out saying he bought 50,000 shares, you know, crack me up about that, folks. You know, they always say billionaire Mark Cuban comes out and buys 50,000 shares. 50,000 shares for, you know, a player like that is nothing. Absolutely nothing. The other side of that, and this is important to understand, in the context of a player, and this is what it is. When you go back on, and you know what's amazing about this? It just depends on how long you've been in the marketplace, but Broadcast.com is what Mark Cuban sold to Yahoo. That was the biggest, talk about a great salesman. He's the ultimate salesman, okay? There's no doubt. Because we were in, meaning Tiger, it was us, Microsoft, and Intel, was in the Broadcast.com prospectus. And many of you may already know the story. But the bottom line is that when we were streaming, so we were one of the largest streamers when that was out. But guess what? The amount of people that were listening, folks, okay, were only 350 people, and we were one of the largest. The point of my story is that he sold that to broadcast to Yahoo for over $1 billion. Okay? So, in that aspect, okay, the deal about believing what Mark Cuban is pushing, okay, and that was the greatest sale of all time. Most one of the Tigers said. So when I look at the aspect of, you know, I heard him out there pumping Netflix, I'm saying to myself, you know, that's a joke, okay? You know, to me, that's just a trade. And, you know, what has happened, there's no doubt, is that the community in general, meaning the pumping by celebrities, gets done, you know, and and CNBC will go right along with it. That's the reality. So, you know, that's the way the markets have changed over the course of years. So, Netflix, my take on Netflix is that, number one, you're going to get down to the 331. We'll see whether we break it with volume. You break it with volume, and you get game down on 172. You know, if we go over to Amazon, we take a look at Amazon. Amazon right now is at down 694, and she's going after the swing low of the 24th now. We're at 295, and the high of the low is 293.81. Alibaba, you can see that ABC up is not only underway, it's getting there, though. Alibaba got to 110 out here today. You know, had that juice. It's in a small ABC structure on the way up. Procter & Gamble is also PG. Procter & Gamble, you know, on a longer-term basis has a good number going. Now, the thing that's going to be really wild, so check this out. Visa, 2 separate times have put all the juice inside the Dow Industrials. And when you look at Visa, and this is a total mind blower, folks, because, yes, I am still bearish the market, but when I look at Visa, it's like, oh, man, this thing, you know, this is an ABC structure on the way up. And the key is, it's like, oh, man, is this a 116-point ABC? When I was looking at it earlier, the most conservative way I could do this would be the A point is 112 approximately. The B is 235. So, you know, we're talking about, what, 120 bucks? 120, yeah, 120 bucks. That would get a 310 on a long, now this is a long-term basis because you're taking the 8 point from February of 2012. So that would be like, you got to figure a couple years to get there. But that's still a big number. And if that's, in fact, what that comes down to, let me go take MasterCard for a second. If I take MasterCard and do the same thing. MasterCard, 194. Oh, look at this. So MasterCard does not have the characteristics of an ABC structure on the way up. You know, so that's pretty intense. Yeah, and as you know, as a bond expert in the den just talked about, I forgot about this trade, but this is an amazing trade that Cuban did do. The best trade Cuban ever did earlier this year was refinanced all his debt from being in U.S. dollars to being in yen. Yeah, there's no doubt about that. It's huge, man. That's huge. Yeah, the guy's probably a genius. That's the bottom line. So, so Mitch, it's going to be a hard one staying short Netflix. But that there's no doubt that is absolutely huge. What is going to be interesting, too, now this is where, so check this out. A few years ago, when we were talking about the strength that's coming into the dollar, what you had is that dollar bond issuance was huge. What has happened in the last couple weeks is that the U.S. companies are issuing debt now in euros. And there, you know, Apple was one of the biggest ones out here. Apple just pushed some big numbers out. Apple's debut in the European bond market has added more surge in euro-denominated sales from U.S. companies as they capitalize on the cheapest relative financing in 6 years. The world's most valuable tech company issued 2.8 billion euros, or $3.5 billion U.S. dollars of notes yesterday, swelling the corporate offense to the common currency to 53.5 billion euros this year, according to data compiled by Bloomberg. The tally is the highest since 111 euros was raised in 2007. That exceeds the total of 47 billion. You know, so that in itself, okay, says quite a bit about the correlation between the dollar and the euro, and you know, we'll see whether we get a counter-trend bounce on this. But that's saying a big number. And what you do have there, the reason for that, folks, is that the rates and the euro currency are basically nil. I believe that Apple got an 8-year note going out there. Let me see if I can pull it again. I believe it was 1.4 or 1.8%. It was like an amazing number. Oh, there it is. It's even sicker than that. No, an 8-year bond, 1.082%. How's it? Can you imagine borrowing money at 1% for 8 years? Oh, my God. Let me have it all. 877-927-6648. You stay right there, folks. We'll come right back.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman wave sequence. Using the Chapman wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy. A set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. test drive all the newsletters for free at TFNN.com.
Tom O'Brien.
Welcome back, folks. Dow Industrials are up 102. NASDAQ is flat. S&Ps are up 13. Gold down 25. Silver off 63. Let's go over to that silver market and take a look at silver. So we have, let's see, it's 78,000 contracts. SI1. We'll put this on a continuous contract. Bring this back for about 5 years. I'll bring it back 10 years. Silver, you see, there's quite a difference in silver versus gold. We're at 1532. Bottom line, even though there is support here, it hasn't held support. Silver had traded at that $15 level, folks, from January of 08 all the way over to August. Then it got trashed down at $8. Comes all the way back and then traded out the same level from September 09 to February of 010. So the way this is out right now, this is going to be interesting because what you do have is that you're at 1530. This thing can go to 1410. So 1410 is a big number. And that's going to be all about is that dollar going to go hit 89 right now? If we do go back over to the dollar and look at it, that's the swing points that are out there, DX1 on the dollar. Those swings, we've hit on the continuous contract thus far today, we've hit 88.72. When you bring this up, what's hanging out here, the swing high from 2010 is 88.80, so that's a point away. We're already down 500 ticks today, and then you have four other swing highs that were generated in 2008 and 2009: 88.49, 89.29, and 89.71. The bottom line is that they want to get into those levels. Now, how we get into those levels, first off, we'll tell you what these commodities want to do. Then how we pull back after getting into them, which will basically take a few months. We'll tell you flat out, is this going to launch, meaning is the dollar going to launch to much higher price? Because if the dollar launches this 89.71 area, well, there's nothing stopping it from 120. That's the way it's just set up. Because remember, in 2002, 2001, that's how we came down. We came down fast and furious. That's when John Snow was the Treasury Secretary, and he continued to keep saying that he believed in a strong dollar, and the dollar went from 120 down to 83. We went sideways for a couple of years, and then we hit the low in 2008 of 70. And right now you're at 87. So you can see you're up 17 from 70. And that's a big number. So you're talking about you're up about what was that, 24% from those lows. That no doubt is a big number. So the real key is going to be, how do you hit it? How do you back off from it? Oil market, if we go over and we take a look at this oil CLZ FOA, oil is a confirmed ABC structure on the way down into the $70 level. What does confirmed structure mean? It means that you took out the B point, took it out with volume. The probability is high that you're going to reach your price projection. We made 75.84 yesterday with 433,000 contracts. Well, you did 425,000 today, which, by the way, is pretty good. What you have to do, though, of course, is what? You have to get to a swing point, because that's where the market talks, walks, and squawks. The first swing point in the oil market is at 82.88. So we'll see whether it can get up to that level. It hasn't been able to do anything out here today. 166, up 166 after it's down, just about for a month and a half straight. Doesn't mean a thing. What you do have intraday is that you had the expansion at 10:30 this morning up until this 79.35. That was coming into, and it gets stopped in its tracks, however, how it came down yesterday, because we came down yesterday with 34,000 contracts from a price point of 79.83 into 78.61. So in that context, that is saying that lower oil prices are going to continue coming at us. The gasoline market, Same setup in the gasoline market. Gasoline's up 0.8% today. Natural gas is up 1.62. And the biggest mover in the commodity market is silver's down 4.2. You get gold off 2.2. We go over to that gasoline market for a second, though. We take a look at gasoline. So that's up a penny and a half, well, almost 2 pennies. That market there is up on 44,000 contracts. That's not even close, so check it out. We broke lows out yesterday with 58,000. So that's saying that gasoline is going lower. That's unleaded wholesale right now at 98. No, at 220 rather. It looks like it wants to run down to this 180 area. We'll see how that does shake out. Some of the Dow stocks out here as we get into the close. American Express is up $1. You get ExxonMobil up 47 cents. DuPont's up 120. GM's down 12. You get Big Mac up 19. Hewitt Packard is up 27. Walmart is up 43. United Technologies, UTX, is up $1.34. And United Technologies, just that's a counter trend bounce also. It's intriguing as to how far some of these have gone down. They've done nice counter trend bounces. United Technologies was 120 in June, gets down to 99. Right now you're trading at 108, and 108 is where it broke down in July. Broke down from 114 to 109. It did that on a daily basis with 10 million shares. Now you're going up with 6. That's on the daily. We take a look at this on the weekly. On the weekly, interesting. Okay, on the weekly you get a consolidation because what you did have the month, rather the week of the 24th, that was some decent juice. You're coming into on a weekly 33 million shares. Last week we only did 18 million. So the way that is checking out on a weekly basis, it's saying it's not going to make it up and above where that downdraft was created. We go over, we take a look at Apple. Apple right now hanging at the highs up here, 10877. The IBB, folks, which is the biotech index, that's down today, but and you're down with expanded volume. So we'll see how it tries to get back inside the lower range. You're at 288.79. You're down 450. You had the expansion of volume. In order to get back in the lower range, this would have to get into 276.65. GILD, Gilead, is the largest weighting structure. That has an expanded volume. That's down about 2.5% today. And what that has just done is got back in its lower range. So we're at 106.16. That's saying that's going to go after that October 15th low of 91. That'll make a big difference for the IBB. Mr. Tom O'Brien, this is TFNN. You stay right there. We're going to be coming right back. Dow Industrial's up 96, Nasdaq's off 2.5, S&Ps are up 12, gold's off 26, silver's off 69. We're going to be right back, folks. Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. This quote here is by Alberto Ferretti. I start with the idea that nothing is impossible and everything can be done in the end. Market-wise, let's take a look at it out here. The Dow Industrials closed up 100, Nasdaq down 2, S&P's up 13, gold contract down $24.70, traded at $1,143 an ounce. Silver down 63 cents at $15.31 an ounce. Platinum off 16 at $1,207 an ounce. Copper off a penny and a half at $3 a pound. Light sweet crude up 173, trading out at $78.92 a barrel. Bonds refuse to go to a lower price, folks. Flat 10-year out here today, 126.10. 30-year flat, 141.07. Both the 10-year and the 30-year want to go test out their October highs, folks. King dollar up to 440. Ticks trading out at 87.54. The euro down 61 at 124.86, and the yen up 1 at 114.73. Our phone number is 927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at it. What do you have? You're in another high. We closing at the high. We're at 2022. That high out there that was generated on Monday is 2024. Volume out here, we get light volume. The volume characteristic out here is MVOLNE. Volume, we've done 796 million. If we go over to the SPY, we take a look at the SPY. What we have with the SPY did 88 million. That's really light volume. You are at the high, however, which is you're at 202.34. What is intriguing now in the context of the SPY is this. So yesterday, we were talking about the TriStar Doji. So you had a TriStar Doji that's set up. Now, what a TriStar Doji specifically is, folks, is this. You first have to gap away. And we gapped away on the 30th to the 1st, to the 1st. Then we did a higher gap and a lower gap. And what we did this morning is that now we get a hanging man up there, too. So what you have thus far is that all of these symbols up here are still bearish. They're still indecision. That's what when you get a TriStar Doji, when you get a hanging man, that's indecision. The difference between just a hanging man at a high and a TriStar Doji is this. A TriStar Doji indicates a much larger reversal. The hanging man at the end of an uptrend is just a hanging man. That's what it is. It's saying, okay, you can go down. You get these all together, and that's basically saying we have heavy indecision up here. We'll see if, in fact, this break topside, can they push it away from this break topside? Thus far, they haven't been able to do that in the SPY. They have been able to do that, meaning the market has been able to do that in the Dow Industrials. The Dow Industrials is quite a way away from the high of the consolidation, because that high, I wouldn't consider that high the 17,350. That consolidation really was the 17,139, and right now we're at 17,483. NASDAQ Composite. Now, Composite staying up at highs, no doubt. Hasn't pushed away from it yet, though. We're at 4620. That level is 46110. The Qs, the NDX 100, the 3 Qs, what we've done with the 3 Qs, that also is light volume. We're at 101.37. What you have is that it's 100.46. That's the number there. Let's go to Costas in Arlington, Mass. Hey, Costas, how you been, man?
Hello, Tommy. How are you?
Doing great. Nice to hear from you. You having a good time?
Yes, very earnings. Thank you.
That's good, man.
Procter & Gamble, Tommy. Is this going to 95?
Yeah, you got an ABC up.
Great. That's what I want to hear.
This is interesting, too, especially it's such a large company, man. And you got a big dividend, right? Yeah, I mean, and what you do have after yesterday, I don't know if you heard it, but I did it after I missed you. But what happens is this is a monthly, and takes longer to come into play. But the bottom line is that a monthly is normally, a lot easier to deal with than dailies or weeklies, because it's a longer term deal. And in this particular case, you got 59, 69, 79, 24. Yeah, you get 73, 83, 90, 83, 93. You might even have 98 into this, man. Yeah,
that sounds good. Do you have time for one more?
Yes.
RIG, R-I-G.
R-I-G. Okay, now this is going to get interesting. Let's take a look. You get RIG up $1.54. You're trading at 28.89. The low is 27.04. That was generated yesterday, I believe.
That's right.
The high is 55.74. Okay, so
I'm looking at this for the dividend.
Yeah, no. Hey, listen, the reason that when you were asking me to bring this up, I love looking at the stock. I traded this stock for about 5 years straight. And what's surprising, that's why I want to bring this on a monthly, what's surprising about the riggers in general, folks, okay, is how low they can actually get. That's the key. Okay. This is intense, man. Okay, so see the way my first look at this is like, okay, you can go to 24. But now let me bring this back closer. So what I did here is that I have this on about a 25-year chart, folks, okay? Now, I guess it's about that's a 15-year chart. And what it's done is broken everything down. It's come off highs of 163. You're at 28. Last month, we had monster volume at 27.91. Okay, so now let's get it closer. I wouldn't bite on this just yet. What I would do is this. Okay, let me see, price projection-wise. What has it done? Oh, my God. Just hang with me for a second. Okay, I got it. Here it is. Okay, so it's an ABC down. Okay, so so a monthly basis, 85 to 38. Man, it's 42, 47. Yeah, don't do it, man. So check it out, Costas. You're going to see this. This is intense. Okay, it broke the B point with volume, 192 million shares versus 154, and then we had 289. That's just saying, so your A point on this is 85.98. That's March of 2011, and your B's 38. You know, your C is up here at 59. That's giving you, that's saying we'll get another $10 lower, man.
Okay, Tommy.
Okay, man. Have a great one. Have a safe one. And, you know, folks, that sounds insane. Listen, I understand, you know, when you have a stock that can go from a price point of $163, just as it is right now, down to this 28. But what happens is this, is that is how these riggers can and do trade. I'll bring this back. I remember, see, I traded this for 5 years in the 90s. Watch this. When I bring this up, because I traded this in the debacle of 1998. I remember this so well. And so this is probably split adjusted a million times. But, yeah, it went from 63 down to 20. And then it got back to 69, and then went back down to 17. And then it made the run, you know. So bottom line is that they can get much lower. And what that's all about, by the way, folks, okay, is that they were like the, do you remember the dry shippers? What happens in the rig business is this, is that fundamentally you get a longer-term contracts. The longer-term contracts are basically at a certain price, whether, you know, for a year, 2 years. Then you get the short-term rig prices. The short-term rig prices is where they get all the juice into it. With oil getting croaked right now, the oil companies will come out into the riggers and say, guess what? We're not paying that, okay? If you want those rigs in business, we're going to pay cheaper. And in the junk pile business, folks, okay, in my career, I've seen them have to scrap rigs 3 separate times in the last 30 years. Scrap brand new rigs. Scrap them. Pretty amazing. You stay right there, folks. We're going to be coming right back. Qualcomm just come out with numbers, and Qualcomm closed at 77. It's trading at 73. We're going to have Tesla as soon as you come back, too. Stay right there, folks.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Tesla just come out with numbers. Tesla closed at 230. It's trading at 238.66. That's gaining what it lost today. It was up. It was down $7.96. Numbers go like this in Tesla. The estimate was a break even, and they made 2 pennies. Pretty impressive, depending what's in there. They are delivering 33,000 vehicles in 2014. What they did do, I believe they cut the 2014 deliveries forecast to about 3,300. I guess the market is basically digging that the aspect that they made money versus broke even. They see the Model X delivery starting in third quarter 2015, later than was originally planned. Right now, you still have it trading up $6, but it lost $7 early in the day. Tesla is down from a high of the 291 area. We take a look at this. We'll put this on a... Yeah, so what Tesla's doing, Tesla's making its way back to... okay, so watch this. Tesla had broke topside, had some real juice in it too, by the way. Starting in March, May of 2013, had juice there, pulls back. It was lighter volume on a weekly basis. Goes topside again with volume. So the bottom of this range that it's in right now is 208.32. That's when, in February, the week of February 28th, Tesla went from 208 to 265. It had monster volume there. We're talking about 98 million shares. When we came down in October, we only came down with 43 million, so it's going to have to be, you're going to need a lot more volume to break those lower levels there. Let's go back to Qualcomm and see what Qualcomm has to say out here. Qualcomm says it closed at $77. It's trading right now at 73. What you have with Qualcomm had already gapped away the last time it came out with numbers. It gapped away from 81 to 75. It did a counter-trend bounce up into the gap. And if you want to see how this works, you came down with 37 million shares. You got back into the gap with 10 million, and you tested it the next day with 8 million. And so the subtlety inside markets is important to understand, folks. And the subtlety here goes like this. You come out with numbers in July. You get down with monster volume. 37 million. You go back up. You come back up with 10 million. You basically test the 10 million, and you come back into that with 8 million. You come back downtown, and what do you do when you come back downtown? You come back downtown with 15 million. That sets up what? That sets up a low of the high volume low that's out there. That high volume low out there is 69 to 71. Numbers go like this on Tesla. This is what you have. On Qualcomm. Sorry about that, folks. The estimate was $1.31. They made $1.36. That is the bottom line estimate. Top revenue estimate, they see the first quarter coming in at $6.6 billion to $7.2 billion, and the estimate was $7.38 billion. So what you have out there is that is trailing estimates. Now, what will happen is this. Qualcomm, folks, okay, that being down, well, let's go over to the 3 Qs right now. The NDX 100 is a modified weighting structure. And inside that modified weighting structure, Qualcomm happens to be a large portion of the NDX 100. Thus far, the NDX 100 closed at 101.37, and yeah, it's trading, well, that's a lot, but she's trading at 101.22. Qualcomm is one of those equities that you don't think about too much inside the NDX 100, just like GILD. Both of those equities, however, can move the NDX 100. Apple, we know, can always move it. Microsoft can move it. Intel used to be able to move it quite a bit. What I've seen, and specifically because what does happen with Qualcomm and with GILD, is that when they move, they're real personality stocks. They can move up or down very quickly and put some real juice inside the NDX 100. We go take a look at the euro out here, because what we are going to see out here, no doubt, is that the euro closed at its lows out here. So coming into tonight, it's going to be really intriguing to see, okay, does the euro want to break down under this 124.40? And does the dollar want to get into this 89 price point? It seems, no doubt, that the market has reversed the course of not liking a strong dollar to liking a strong dollar. You can make that correlation, and that's pretty intriguing, actually. What is still out here, which is just absolutely amazing, is that the bonds will not back off. And the bonds continue to say that they want higher price, lower yield, and with that, of course, what is going to push that bond market up to that higher price? Thus far, what we have is we have a high-volume spike high in the bond market October 15th. That spike high correlates to the spike low that we had in the S&Ps. The mantra in the news flashes out here today are pretty amazing. And what those mantras are is that it doesn't matter what has happened in the election, we're still going higher. The amazing part, and I agree, by the way, it wouldn't matter what happens in the election. The surprising thing out of this is that they still talk about the aspect that the economy is not moving and we want jobs. And I would make the the comment that this is pretty intriguing when, in fact, we're at all-time highs, have been up over 200%. And folks, still continue to say that the economy is not moving. Well, if the economy is not moving, number one, how are these companies cranking out this kind of money? How does J.P. Morgan Chase pay fines of billions and billions of dollars and make billions and billions of dollars if the economy is not moving? What the correlation is, folks, okay, the economy is moving. Has been moving, is moving, and, you know, the rest of it is basically garbage. 877-927-6648. Now, let's go over and take a look at those financials. The XLF still at highs. XLF up 23, up 16 cents out here today. 23 million shares traded. Light volume. There's no two ways about that. When we take a look at the XLF and we put it back in the correlation to where we are, you know, it's done about a 50% retracement of its move down in 2007. You smack right into, well, actually, you know, last month you finally did some volume. Last month we did 1.2 billion, and yeah, but you're coming into 3 billion. The swing point that it's going after is $24.70. That swing point has 3.1 billion. The prior months you're only doing 600,000. You know, so we'll see how that does shake out. Berkshire Hathaway, BRK. We take a look at Berkshire. Berkshire is the largest weighting structure inside the financials right now, and she got over the high, and that's what you had to do. She had to test this high. The high she was testing was September 19th. That's 142.45, 142.92. We did it today with 2.8 million versus 9.4. So the real key is now it's got to stay over 142.45. This is Tom O'Brien. This is TFNN. You stay right there, folks. We'll be coming right back. Dow Industrials finished up 100. NASDAQ down 2. S&P's up 13. We'll be right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We had the Dow finish up 100. NASDAQ was down slightly. S&Ps were up 10. You had Marvell up 13 cents. Coke was up 49. DuPont 130. Microsoft up 29. Big Mac 17. Let's go to Mark at Fort Collins. Hey, Mark, what's going on?
Hey, Tom. I apologize if you've already talked about this because I just tuned in, but have you talked about the dollar at all?
Well, talk to me.
Well, I'm just looking at I usually use the UUP or the UDN.
Okay.
And to me, it looks like the UUP is running out of juice up here, but it doesn't look like it's doing an ABC up because of the volume. But I was wondering what the dollar contract's telling you, if you see to get the volumes on that.
I do have the volumes on that. Okay, so if we start with the UUP, this is what you have. The UUP, folks, is the power share ETF structure. That's the bullish fund. Okay. Now this moved. Bottom line, it moved from $21 up to $23.25. It's a slow mover. Last time it had any juice was the high of the 3rd of October. That was $23.08. You had 4.5 million. Then what we did, we pushed into that at 4.1, but that at the swing point, what you did is you did 2.4. So inside that correlation, just as Mark's saying, hey, guess what? The juice isn't there. Now, what that means, though, is that you have to get back inside $23.08. That's kind of how that's set up. When you go over to the dollar index, Mark, what you have is this. We're so close to the swing point that, I felt for quite a while that it was going after. I suspect it's going to get hit. Now, what's unusual here, folks, is that you're going after a swing high without a stop from May of this year. May of this year, the dollar's at 78. The swing point is at 89. And, where it hit, we hit 87.72 today. So it's like, okay, man, you're gonna go after it, you're gonna hit it. I was really expecting that. Okay, so you get the the first swing that we just blew away was 84.96. That was a swing from July. And most of the time, you know, you could back off a bit, but guess what? It didn't want to back off. So the real key is going to be how do you hit it, number one, meaning, and thus far, you know, we're so close to it. It's like, okay, that's only 1,000 ticks away. We're up 500 ticks today.
Right.
You know, so.
And it's obviously taking gold apart. And then the other question, the other thing that, you know, you've talked about for a long time is typically dollar up, market down, and it's basically the market's been tracking the dollar.
It has. No, there's no doubt that correlation has changed. There's no doubt about it, because what you have seen also, folks, intraday is that just even a blurb, if the euro goes up a blurb and the dollar pulls back, the S&P pulls back. So, and those correlations over the years always will change. They do change, and all of the above. But that correlation looks like it's in place pretty much right now. So, you know, we'll see if that's what it is. But that correlation seems to be in place. And then the other correlation, of course, is the bond market. You know, higher bond price, lower yield seems to bring S&P down very quickly. You know, so when you look at the oil market, when you look at the gold market, the real key, okay, if in fact that dollar is going to spike to 89, where is gold going to spike to? You know, what will happen, folks, okay, you know, we've talked about this a few times, and what specifically it is that gold at this price right here, at 1141, will put about half the miners that are in business right now, I'm talking about producing miners, every ounce of gold that they are mining right now, they're losing money on. That can only last so long. Now, that's the first part. Now, the second part gets more intense, and what it is this. It has to do with the correlation of where they're mining, what currency they're mining in. And that's going to be a close call, man, you know, because the fact of the matter is most of the time, as long as they're dealing, let's say, so if we go like this, like Gold Corp would be in a good situation, and this is why. Gold Corp, their biggest miners in Red Lake, folks, and so their expenses are in Canadian dollar. So the Canadian dollar is getting weaker. They get paid in U.S. dollars. So that correlation there works really well. You know, but out of the amount of miners there's not a lot of gold miners in the world, folks. That's the real bottom line. So how this shakes out is going to be a big number. There's no doubt. You know, and a few of them have just blown through their lows, and not only blown through their lows, blown through them with volume. If you look at IAG, it's pretty amazing. I mean, IAG just went from 407 down to 142. You know.
Do you think on that note that like the basket of stocks like the JDX is a safer group of companies than say the JDXJ because those are the juniors because of this price thing?
I don't, because what happens is this. The gold miners in general, right, can run out of cash very quickly. Okay. And what happens, if you're out of cash, you're out of business. So whatever company you're going to make a trade on or an investment in, make sure they have cash to get through this, because that's going to be the big number. You know, you had Anglo Ashanti yesterday. They were coming out, AU, turning around and saying, okay, they're going to sell their mines, and the CEO had the nerve to say, well, we're going to sell them for someone that's going to give us value. No one's going to give anyone value in the gold business today, folks. It's not even close, okay? They're going to come in, and this is, you know, for nothing. Why would you give anyone value? It doesn't make any sense. You know, so there's problems out there in that mining business in a huge way, not in a small way. Now, that being said, that correlation of how much it costs to get gold out of the ground, and does that make a difference? It absolutely makes a difference. So if you're, you know, if you're a believer that in the correlation of gold has value, well, guess what? You're buying it less expensive than owning a mine right now, and that is a decent scene. You know, and the real key is that don't get over your head. You get over your head, you'll get flushed out. You know, at these levels here, you're not over your head. Guess what? You're going to look back and you're going to say, okay, that was a decent deal. So.
All right.
Okay, man. Have a great one. Have a safe one. When you look at platinum, depending what if you're buying physical gold, silver, or platinum, I would just stick with well, it doesn't matter. What happens at silver, even at this level, the premiums on silver just seem like they're always too much. But gold and platinum, if you can actually get platinum coins, folks, that is the number right now. Platinum is only at $1,206. A lot of dealers don't have platinum coins, but if you can get them, that is the number. Platinum in itself, that correlation inside platinum can go a lot higher. I mean a lot. If we take a look at platinum, where it's been, where it is right now, platinum had made a high out here of 2,300, and it made the low, I think, at 700. Yeah, 744. You did a counter trend bounce. You got all the way up to 1,900. You're back at these levels. What the difference is, well, let's put it this way. If you're going to buy one or the other, I'd buy the platinum. The reason being is that platinum is a precious metal, the most precious metal, and it's used to take poison out of the atmosphere, folks, okay? So you have two different things happening. What also happens is that it's the hardest metal to mine, meaning to get out of the rock. The hardness of the rock to get platinum out is pretty incredible. So as you put all of that together and the amount of supply versus the demand is basically at equal levels. And it's very unusual when you can get platinum for all of $70, $70 more. Those correlations, when the metal market is going, those correlations, that spread will go out to about $200. That's how that shakes out. The difference with silver is that silver is a byproduct of a lot of different mines. When they're pushing out copper, there's silver in there. When you're pushing out gold, there's silver in there. There's a lot, and I'm just talking physical now. That's all I'm talking. What you will have happen, now this is here, so check this out. This is pretty intriguing. If we go over and look at First Majestic, and you'll see the First Majestic got hit really bad. Now, First Majestic is a great company, okay? First Majestic, and this is something to keep in mind when this metal turns. So First Majestic hit a low out here today. First Majestic takes in $261 million a year. If you remember, depending on how long you've been listening, when I used to have Rob McEwen on, what McEwen had done, and this was very successful in Gold Corp when gold was going up, is that Rob didn't sell the gold the first few years. Well, what's going on is that First Majestic, and that's one of the reasons it got hit so hard, First Majestic decided that the prices of silver were too low when it was at $20 and didn't sell it. So that's why you see it getting hit heavier, because he's in a position he doesn't have to sell it. But the bottom line is that he's holding ounces of silver that are also going down. This is Tom O'Brien's TFNN. Stay right there, folks. We'll come right back.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Tom O'Brien.
Welcome back, folks. We had the Dow Industrials finish up 100, NASDAQ off 2.5. S&Ps were up 13 after the close out here. You had Qualcomm come out with numbers. Qualcomm had closed at 77. That's trading at 72 right now. So that's going to get some pressure in the NDX 100 tomorrow. 72, your last swing low out here, which was established on the 15th and 16th. 71.89 is the high of that. Now, Qualcomm's going to be a big one to watch. The reason being is that, number one, you have the high volume swing down at the 15th and 16th. It's going to go after it. The real key is going to be, okay, does it go after it? Reject it? Go higher? Or does it break down? It breaks down. what you have then is that that's going to be another indication that, number one, we're going there, and number two, we very well may break down. Now, when I look at Qualcomm looks to me like it's going to go to 68, because at 68 from November of last year, that has that high volume swing low, at 66.25. Tesla, TSLA, Tesla came out with numbers. Tesla closed at 230. That's trading up $14. It was up 7 earlier. First it was up 6. Now it's up 14. That had given back $7.96 before they come out with their numbers. Numbers go like this on Tesla. They made 2 cents versus breaking even. They cut their 2014 delivery forecast to 33,000. They said that the X model is going to come out later than they thought. Bottom line, the market likes what they're talking about. I suspect what they're liking is that they're making money versus breaking even. And more than likely inside of those documents about cutting back and coming out later, what you're going to see is more than likely you're going to see the expense ratio cut down. I suspect that's exactly that's what you're looking at out here. Let's go to ExxonMobil, because what we have had is that the oil market itself, okay, is get toasted, roasted. The gas and oil sector, the stocks, have come down. They've come down hard. Exxon down from 104, hit 86 bucks. Right now, it hadn't, even with a nice day like today, in the Dow, that is, okay, it just couldn't get any traction. So it's going to be how this equity goes after $90.61. I believe they already come out with their numbers. Let's see. Yeah, they already come out with the numbers. The next numbers don't come out until January. Chevron. We go to Chevron. So Exxon is the largest weighting inside the XLE. Chevron is number 2. Chevron was up $1.68 today, but Chevron also has come down from 135. You're at 117. That has a high volume spike low at 106. Chevron's going to be the same way. It's like, okay, is Chevron going to be able to get any juice inside this market? The way Chevron is trading right now, when this came down in October, it not only broke a swing low with volume, 57 million, but it got all the way back to January, not of 2014, of 2013. So the way that Chevron is trading right now, it looks to me that, number one, it can't handle higher price. Number two, that it's trying to make its way back inside the 100.9, $100 and $109. We get back inside that, then Chevron's going to have some problems. The Schlumberger was up 248 today, so let's go to Schlumberger next. Because these equities, you know, bottom line is if they've turned and they're going to go topside again, the Schlumbergers, the rigs, you know, we had brought up rig earlier. Rig looks like it wants to go a lot lower. You know, Schlumberger is a good indication that, okay, can it get up and move into higher price? It's come down from 118. It got down to a price point of 86. So these took big beatings. Today, you're up 248. No juice under the deal. We did 7.9 million. A Schlumberger would have to get up and over 100.30 to have a real chance of going topside. You know, that's on a weekly basis. We take a look at Schlumberger and you put that on a monthly basis, and what you have is this. The high that was established in 2007 was 114. That high, we did 250 million shares. We took that out with 131 million. Now watch this. It's not just how you take the swing points out, folks. You take them out with volume or you don't take them out with volume. Okay, in this particular case, Schlumberger got over the high, did 131 million shares versus the high of 2007 with 251. Then gave it up. But when it gave it up, what is it showing? Well, it gave it up with volume. Then we came down with 247 million shares. Now, what that sets up is that sets up a price point that it wants to go test 78 bucks. So we'll see how Schlumberger handles price number one and handles that expansion on the way down. Halliburton, we go to Halliburton. We take a look at Halliburton. Halliburton today goes up $1.19. Halliburton's come down from 75. Hit a low out here, I think of 47. 48. That's on your daily. We put this on the weekly basis, and what you're going to see on the weekly basis, same deal. High volume spike low. That wants to test $48 on the monthly basis. What you have, we bring this back, and on the monthly basis, oh, this is really intriguing. Oh, so check this out. Okay, this is pretty cool. So on a monthly basis, boy, this is amazing. Okay, this is going to be a heads up all over the place. So the XLE, folks, is going lower. So check this out. So Halliburton, first off, on Halliburton, you have your swing high in 2008 is $55.38. That swing high had 362 million shares traded. We got up there in 2011, and we only did 242 million, so 100 million less. Stock goes from $57 down to 27. Comes all the way back up and takes both of those highs out. Now, when it took both of those highs out, folks, okay, it took them out with 157 million shares. The next month, you did 186 million. Well, the correlation, 186 million versus 242 versus 362. Let's do it again. 186 versus 242 versus 362. Then what ends up happening? Then it blows right back inside the range with 393 million. This thing's going lower. Period. Where? $32. And right now you're at $52. Okay, so what you have inside that correlation, so that was two of the riggers, Schlumberger, Halliburton. Big problem. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. And whatever you want in life, folks, visualize it like a nice big motion picture. Step into it, take ownership of it, and fly with it. Thanks for being here, folks. Have a great night, safe night. Look forward to speaking to you right here tomorrow. Wow! Go get them, folks.